Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburg, and I'm joined today by Bob Icino. Welcome, Bob.
Good to be here, Jeffrey.
Well, it's hard to believe we're wrapping up November already. After a pretty rocky October and a nasty November, what does December look like, Bob?
Well, the beginning of December looks pretty volatile in and of itself with the G20 meeting, the OPEC meeting we've got coming up, but it will probably calm. Hopefully we get that Santa Claus rally everybody likes.
Well, everyone does love that Santa Claus rally, no doubt about that. Are you ready to get into this first lightning round, Bob?
I am ready.
Fed Speak. Well, we certainly have a big docket of Fed Speak and a lot of forward guidance coming out this week. What are you looking at specifically when the Fed is speaking this week?
Well, I want to see the lead up to Jerome Powell's speech. We already had Vice Chair Richard Clarida say that the Fed is actually close to neutral and should be data dependent. 3 more speakers today. I want to see that in the context of Jerome Powell's speech. Well,
it's interesting to see a little reaction in the U.S. dollar, a little strength in the U.S. dollar. So what type of trade example would you utilize as we go into this Fed Speak week?
Well, I think the place to look at this is gold. You generally don't have gold and the dollar moving the same way. We've had that lately. That's flight to safety. We might get that out of the market now. So I'm hoping to sell a decent call spread as an example of what you can do to take advantage of the higher volatility we've seen. I'm looking at the 1240, 1260 week 1 call spread, expires December 7th. With the underlying at about 1227, I can sell the 1240s for about $320. Buy the 1260s for about $90, take in about a $230 credit.
No, this makes a lot of sense, as we will see continued volatility, not only in the dollar, but obviously in gold itself. So as Fed comes out this week, I like this trade example, Bob. Great stuff.
Thank you. That inverse relationship takes over, all else equal, between the dollar and gold.
Absolutely. And remember, these are trade examples, not trade recommendations. Let's move into the second lightning round. Apple places second. Well, we have seen Microsoft vault Apple as the largest company in the world. Why is that? It's due to the beating that Apple has taken. We saw recently another potential 10% tariffs being included, and that really sent some sellers out there on Apple yesterday. But what are your thoughts on not only Apple, but the whole FANG stocks itself?
Well, I think in the battle for the most meaningless title ever, Microsoft's got it back briefly. But essentially, there's trouble with the tariffs and especially the electronics, which doesn't hit Microsoft as well. Shouldn't hit all of the FANG stocks, but as you know, Jeff, they tend to trade together.
So how do we embrace this volatility? The way I'm looking at it, Bob, is that after a pretty substantial up day yesterday on Monday, we saw a 2% move up in the NASDAQ, a little bit of recovery, a little bounce, if you will. I want to look to continue to see this volatility in NASDAQ, so I'm selling a call spread, about 2% out of the money. So I'm selling the DEES Week 1 NASDAQ E-mini 6850 call, collecting about 50 ticks for that, and that's going to also allow me just another 2.5% higher. I want to buy that 7050 call. That's going to cost me about 10 ticks. So net, I'm looking to collect about $720 on this call spread. What do you think about this? As I'm typically trying to approach this as a range-bound NASDAQ E-mini with more downside.
Yeah, I really like what you're doing, and especially when you're doing it, given all the binary events that have to get out of the way for the bull market to actually break through the slow holiday markets that we usually have. So it's a good trade, and it's very good timing for that trade.
Well, as remember, this trade example, it expires December 7th, same expiration as yours, Bob, about 10 days away. And the December NASDAQ future is the underlying contract. And this trade example was priced out when we had the futures at about 66, 76.50. And that at-the-money volatility we like to talk a lot about here on Striking Options was around 27. So it'd be interesting to see, as this is a short-term trade in the NASDAQ E-mini 100.
And again, the timing of it, Jeff's really good. It's not impossible for equities to rally through what's been going on, but given the timing of it, it's going to be difficult. Your trade should work out good.
All right, Bob. Well, thanks as always. We also want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.